65.06% of Michael Burry's portfolio is in just these four stocks. The popular investment manager known for his role in calling the housing bubble and making a lot of money for investors during the '07, '08, '09 great financial crisis has been vocal on Twitter talking about how he thinks we're headed for a massive economic recession and how you should all sell your stocks because that's not going to be good news for the stock market. So his latest fourth quarter 2022 portfolio update was out on February 14. There were some massive changes, including a 47% sell of his biggest holding, Geo Group, and then he added some new companies, Black Knight, Coherent Group, and Alibaba Holdings, and he sold off some investments and he completely sold out of Aerojet Rocketdyne Holdings, Charter Communications, Core Civic Inc., and Liberty Latin America. This was a major overhaul for his portfolio. If you recall, I did a video just a few short weeks ago where the top four holdings in his portfolio were over 90%, so a much more concentrated portfolio, and in my opinion, a much more defensive portfolio uh, from the in the third quarter compared to the fourth quarter. So his portfolio looks a lot less defensive now than it did in the third quarter, and also it looks like the portfolio is moving to capitalize on the economic reopening in China with the purchases of Alibaba Group, JD.com, and MGM Resorts. So all of these moves here suggest to me that Michael Burry has gotten at least a little bit less bearish on the stock market and the economy overall. So let's take a little bit closer look at the top four stocks in his portfolio, starting with Alibaba and Geo Group. Of course, Alibaba, the big Chinese company, trading at a forward PE ratio of just 13.46. It has experienced a little bit of a bump in valuation since the economic reopening really started to gain momentum in China, really started to come into fruition. There was a lot of skepticism whether or not China would actually reopen its economy and whether or not it would keep it open despite the rising case counts. And for now, it looks like it has reopened and is keeping it open. So that's been good news for several companies in China. And then his other holding, Geo Group, forward price to sales ratio of 7.8. This has risen a little bit, although that stock was down significantly today after it announced earnings. So maybe a bit of good foresight from Michael Burry selling it between the third and fourth quarter, selling near so much of his stake in that holding and completely getting rid of his other holding in the prison stock. So let's look at the other two, Black Knight and Coherent. Black Knight, of course, the mortgage fintech, trading at a forward price to earnings of 26, which is on the expensive side for his portfolio. The most expensive other than that one is Alibaba at 13.46, but Alibaba has a significant tailwind behind it. I'm not so sure about the tailwind behind Black Knight and the fintech mortgage industry, considering the significant drop off in mortgage demand as interest rates have gone up. And then the laser technology company Coherent trading at a forward PE of just 12.01. So overall, what his portfolio now has in common is, for one, it's capitalizing on the reopening of China. So he seems bullish on the reopening of the Chinese economy, not just with this Alibaba holding, but if, as I showed you earlier, with his addition of JD.com and MGM Resorts International. MGM, the casino company, is going to benefit from an increase in Chinese consumer mobility, right? They can travel in and out of China now more freely than they were able to before the economic reopening, with all these constraining quarantine requirements and testing requirements every time you wanted to get in and out of the country. So because that's eased, the consumer is going to be more mobile, and that's going to help that stock. So overall, that's what I'm seeing here. I'm also seeing a more enthusiastic Michael Burry here, not so bearish on the economy as it appeared in the third quarter. That's interesting to see. He was so vocal and so bearish about the economy. If you follow him on Twitter, you would have seen several posts from him highlighting how bearish he is and making his case. This seems a little bit less bearish, although I wouldn't go so far as to say that he's bullish. That's not what the portfolio suggests. It just suggests less bearishness with a bit more optimism for the Chinese economy now that it's reopening. So I found that to be interesting. I hope you found that to be interesting. He's a really good investor, and when really good investors, proven investors, make these kinds of moves, I tend to pay attention. So there you have it. That's all I've got for this video. I truly appreciate your viewership. I hope you'll tune in next time for my next video. Thank you for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.